So much on tap this week when you talk about earnings. So let's start with Nvidia. What's the one key thing you're looking for in this report?
Yeah, so Adam, I'd say there's a couple of key things to watch on this call. But if you're looking just directly, once they report the press release, it really comes down to data center revenue, their Blackwell revenue out there. But you look at overall the revenue for the April quarter, we're looking at about 43 billion or so. As it's specifically tied to data centers, we're looking at about 38 to 39 billion on that side of things. And then, clearly on the guidance, we're looking at about 46 billion in terms of revenue. I think outside of just the data center revenue in Blackwell, keep an eye out on what they have to say on the margin side of things.
Okay.
There's a big story here or the expectation going into the second half of the year is that they're going to start seeing a recovery in terms of gross margins. We need to see them, hold themselves to that.
So let's break this down. Near term and full year revenue impact from the export restrictions to China. How do you think Nvidia is planning to offset? Are we going to get an update on their plans to offset, do you think?
Yeah, I mean, so when you look at the quarter here for the April quarter, there's going to be a $5.5 billion hit in terms of write downs tied to some of the China oriented stuff. I think so that's gonna weigh on the margins here for the quarter. It's going to look a little bit messy for investors. And, we're looking at is about 13% historically over the last couple of quarters have been tied to China. About 8 to 10% of their data center revenue is really impacted here. So that's really the key. As we kind of go here over the next couple of quarters, we do want to see what Jensen has to say about the China side of things. Clearly, it's an enormous market. That's where you've got some major hyperscalers outside of some of these U.S.-based players. So you want them to be able to kind of get back into the market. We think they're going to try to get back into the China market, despite the fact that they have the H-20 ban right now. It's going to take a couple of months. It's not going to positively impact anything as far as their guidance is concerned. But some of the stuff we've heard, over the last 2 weeks, as far as the Saudi Arabia deal is concerned, some positive news on the policy side of things, I think is also reason for investors to be confident that eventually Nvidia will be able to get some momentum again back in China.
Let's talk about the hyperscalers and sovereign AI buildouts, the UAE. You just mentioned Saudi Arabia. The U.S. position in different ways, has it strengthened? Has it softened? Is the geopolitical risk and internal chip initiatives, are they going to be able to grow in this way, or are they going to hit a kind of plateau?
Yeah, I mean, listen, as far as, the U.S. hyperscalers are concerned, they're in a pretty good situation. We just went through Q1 earnings season for the hyperscalers. They all either reconfirmed guidance for 2025, and in some indications, companies like a Microsoft actually hinting towards higher spend going into 2026. And that's what investors really needed to hear from a lot of these hyperscalers is the conviction that spending is going to remain intact here in the U.S. When you start thinking outside the U.S., sovereign AI is something that Jensen, as early as 2-3 years ago, really touted heavily in terms of the opportunity tied to sovereign AI. And I think there were definitely some concerns that were out there about how some of these geopolitical pressures were going to hit Nvidia here over the next couple of quarters. We did see the administration essentially ditch the AI diffusion rules that the Biden administration was planning to put into effect here in May. That is a good thing, from a geopolitical perspective and revenue outside the U.S. Our view here is the administration probably uses Nvidia's GPUs as more as a bargaining chip here over the next couple of quarters with a lot of these trade deals, and we could potentially see more of these kind of Saudi Arabia-oriented deals looking ahead outside the U.S.
So how confident do you think Nvidia is about achieving its fiscal year 26 shipment targets?
We think revenue, for the most part, is definitely attainable here for fiscal 26. And I think more importantly is what investors, how confident are investors going to be going into the following year, into calendar 2026. And again, I think over the last 2 to 3 weeks, the confidence has definitely increased here for a lot of investors. And we think what NVIDIA has to say here, when they do report, is going to just further strengthen that conviction level.
And what are the implications of the compute board shift from Cordelia back to Bianca on gross margin guidance and GB300 ultra timing?
Yeah, I mean, listen, I think as far as margins are concerned, going into the next couple of quarters, that's it's going to be a huge part of the story here. We need to see, the improvement on the margin side as Blackwell ramps here. The GB300 later this year, it's going to be incremental. It'll be a positive. It just continues to, throw into effect the annual cadence for Nvidia. Improves that competitive moat out there relative to their peers. And of course, they did at GTC earlier this year throw out 26 and 27 planned launches, and we do think the pipeline remains extremely strong for them. So I think conviction level overall, as far as their pipeline, the revenue potential from future launches looks very good, and if they can. If they can reconfirm that the margin expansion story going into the second half of the year, I think that'll be enough to kind of drive another catalyst here for the shares.
Let's shift to Salesforce. A lot of pressure on Benioff and team. And so how confident are you that Agentforce and Data Cloud can meaningfully contribute to revenue in fiscal year 26 versus remaining in, the quote, proof of concept mode?
Yeah, I mean, listen, I think as far as Salesforce is concerned and Benioff, the bar is fairly low for this company, which is good. I mean, the last 2 to 3 years we've seen, or post-pandemic, we've essentially seen growth rates really sharply decelerated. Essentially, you kind of look here for the April quarter, we're only looking at a growth rate of about 6 to 7%, which would be their lowest revenue year-over-year growth rate ever. So the bar is very low here. Agentforce is something where we want to see the bookings continue to strengthen going into the second half of the year and into next year. It's not going to be a big contributor on the revenue for Salesforce right now. And I think that's really important. It's going to probably make up, let's call it very low single digit revenue going into the second half of this year. And then hopefully, it becomes a bigger contributor as we go into 26 and of course into 27. So the run rate of bookings, I think, is going to be very important for investors to hear about Agentforce. But as far as this quarter is concerned, we want to see what the enterprise spending landscape looks like, and we want to see those revenue growth rates really start to stabilize and hopefully start to incrementally improve as the year progresses, because that's essentially what Benioff and team hinted towards when they provided their annual outlook just 3 months ago.
Do you believe the new flex credit system will resolve pricing friction around Agentforce, or is the risk of seat-based disruption, is that still underappreciated?
Yeah, I mean, so, we'll see how this all plays out here. There's a lot of moving parts here. And, as far as kind of, the Agentforce platform is concerned, and it is going to be more consumption based in nature here over the next couple of years. I think it remains to be seen kind of how the different dynamics, and how AI really disrupts their ecosystem and just the overall broader software landscape is concerned. But we're hopeful that ultimately this is going to end up being a net beneficiary for the company. It's going to take time here. It's not something that we're necessarily going to get the answer to here over the next 3 to 6 months. And again, we need to kind of see that momentum really start to pick up for Agentforce.
Okay, let's shift to Marvell Technologies, because they have underperformed for several past quarters. There's a loudmouth on a very popular television network that says, buy this stock, because it's underperforming. I'm not going to ask you buy, hold, or sell, but I am curious, what should an investor make of the fact that Marvell's decision to delay its investor day? Is that a sign of internal visibility issues, or is that something else? Caution, beware, as the old timers would say, danger, Will Robinson.
Yeah, I think the fact that they did that, I think they had to do it. I think there was just way too much uncertainty, especially when you look at the timing of when they did this, right? It was when we were still in the eye of the storm with a lot of the tariff uncertainties. It was before, some of these tariffs were starting to get rolled back. So, the news came at a pretty bad time. But in the same respect, I mean, listen, it's hard to put long-term targets out for a company, or even, reconfirm certain expectations when you just really don't know what the policy landscape is going to look like. I will say this, they did delay that, but they did, also announced that they are going to have a custom silicon event. And that really is the key to the story for Marvell. When you look at the growth expectations here for the company over the next 2 years, a big part of it, or the biggest part of it, is going to be on the custom silicon side of things. It's going to be that relationship with Amazon, and it's going to be potentially new contracts that they sign with other hyperscalers out there over the next couple of years. So the fact that they are having that event, I think, is a positive. I think if they can reassure investors on that Amazon partnership, as well as the potential for additional business going into calendar 26, I think that will be a positive out there for investors. But you kind of look just as far as the investor day is concerned, and they did reconfirm guidance here for the current quarter. I think if you're an investor, you almost have to look past some of the uncertainties here over the next 3 to 6 months and focus more on what they have to say on that custom silicon business.
I'm probably asking you to restate what you just said because you brought up the situation with Amazon, but how secure is Marvell's position in Amazon or Microsoft's next-gen custom AI silicon roadmap?
I mean, from our point of view, we think they're going to be okay. We did want to hear it from the company themselves. I mean, they did reiterate some of that conviction level on their last call, but again, I mean, there is a lot of noise out in the market right now. We do need to hear them, again, reconfirm some of those expectations looking ahead. And the fact that they are holding that custom silicon call, I think, is very important. I think that in itself, makes us feel a lot more comfortable that they do have positive news to essentially, cite to investors.
Okay, so let's wrap it up and probably heading back toward Nvidia with this question. But the uncertainty regarding the negotiations over the trade war and tariff situation with China, we're going to see hopefully some movement in the next 30 to 60 days. But is there a potential for that to blow up everything that we've just discussed, especially for these companies?
Yeah, I mean, if it doesn't work in their favor, yes. I mean, it has the potential to be both a positive and a negative on the policy side, right? And as far as China is concerned, our view is they will continue to walk back tariffs. I mean, I think you've got about a 30% tariff in place. The hope is, maybe even that fentanyl trade, continues to get rolled back. I think, and then we'll see what type of role Nvidia has in China, whether or not they can get some of that revenue back. I think right now, though, when you look at some of the revenue expectations going out over the next couple of quarters, a lot of that China expectations have been pulled out. So I think there's more positive than negative that can come out of China for Nvidia. I think the other thing that we need to keep an eye on is this 232 semiconductor investigation that we don't have answers to yet, and how that is going to impact the broader semiconductor market. What exactly comes out in terms of the tariff rate and what have you, and how that could impact other type of negotiations that are out there. So that's on wait and see as well, and that could potentially be, again, either a positive or negative catalyst depending on what exactly we hear from that front.
And lastly, are analysts like you who cover these different companies sleeping better now than they were just after Liberation Day?
I think you have to be, right? I mean, I think, you never know when some of the stuff is going to turn, but I think right now we've definitely kind of walked away from a worst case scenario. I think we're going to be sitting around here over the next 3 years, probably talking about a lot of uncertainty as far as policy is concerned. But, with semiconductors just in general, I mean, being geopolitical in nature and being an ecosystem that is, just all over the place from a geopolitical perspective, I think you're going to have to be on your toes. But what we tell investors is definitely have more of a long-term outlook for semiconductors, especially as far as that AI trade is concerned, because we are still early innings here, and there is a lot to be had here over the next 3 to 5 years.